Welcome. Merry Christmas. SMF MMTs, the Google Christmas special, and that is trading the Google directional movement along with the 610 put, which was a trade earlier. 2020 was a close. It's come off the highs, so you were selling into those highs. Your wholesale over here, 2.095 on the $600 call. That low was $19, which is a dollar up there. So basically, in your platform, you're breaking higher. So you would buy the calls, let that run on the 600 now. When you get, see, you just teened right up here. So let's take a look here. Let's take a look. Let's take the brain down. So you can see where the teeny high is. That's way back over here, half of that bar, MMTs. The options, $600 call, $19 was the low. This one here, we're starting to put a bottom in on the $610 put. Relative to this print in the equity price, right here at that teeny resistance line, MMTs. The understanding of taking what's in the market into your coffers is how to get those entries and what they mean and why you're on the 610 put. So if this move fails, that's where you're buying. Rather, if we continue this broader price, 14Es up and 14E down, consolidations in here, one way I'm breaking higher or I'm going to break back down. So knowing that we're in the midday holiday morning, the time is 12/23, 2010 is the date, and the time is 9:41 a.m. Pacific Standard Time. How about that? And a lot of people are going to be clearing out of the tapes. But I just want the MMTs to understand that moving forward on the 26th, when they come back from their holiday during that light trading week, is that they're looking at how premium, option premium, $600 call option premium is how they deflate that. When you're entering as an MMT options market maker here, this is a good price. And also getting in at times and out at times on both sides of the market and trading the equity long. So you should be buying your shares down here with your SMF assigned buying power, and you should be getting these moves and then getting slide the bids. And this is what most equity prices are doing. And the option call, $600 call, that $600 put relative to a $606 high on the day, which is lower than the previous day's high in the brain. So basically, watch and see if they slide the bid. They'll bid pop. Watch your gauges. Watch everything in the mini brain right here. Watch that ratio high. Current ratio is 0.3. So that means there's weakness in this move right now. MMTs. This is Google equity price. Google 610 put. $600 call. How to trade both sides of directional movements. Also, the fine art of dollar cost risk entry management equals superb stop management and directional movements, so that when one side wants to break higher or lower for that matter, you are trigged. You are trigged in the trade. And we're going to talk more about this throughout the day. We just want to get this out here right now. And you need to know it, MMTs, because this is the trade and how this balance out in the SMF market maker debit ratio planning. That means that, I'm walking it, then I'm sliding it, and this is the trade management. This is what the platform does. It allows you to get the breakouts. Also, these big drop downs where prices are made, these are great entries, as you can see, and then slide that bid. So basically, this is what it's been like on the 23rd. Right here was walking that dog and sliding that bid. And on Google, we've been working our way gradually up. We have been having teeny expansion in the movement. And we have a 1 teeny, 2 teeny, 3 teeny pullback right to the price action line. And this is the wonderful thing. about understanding that price action line. So let's just go right here, where this is where we're at compared to where we were over here. So you can see your ascending teeny expansions, and you're back up toward these major highs. Here's that teeny line, and I slide the bid back to this teeny. That is 1 teeny, 2 teenies lower at 23 pennies a teeny. Well, for today, that's a -0.46 trend ratio. And that means that the trend ratio at this particular top, and that top has occurred within this bar down here where my pointer is. It's 12/23/2010. It's the 12:45 Eastern time bar, and the open and the high and the low and the close, those been 29 pennies. The IR is 59. Bid and ask ratio, half bar, 604, 26 pennies, closing -10 pennies below the last bar, which equals negative ratio weakness at the teeny support line. He has to go above 55. You're at 61. There you are. You bid popped. Your gauge popped. Look at your gauge. It just popped from here over to there. So you can see what happened. You had a bid pop. Market maker bid pop. Flash trade. That's when this is going to tell you what the flash traders are doing by the ramping of the RPMs in here to the directional price movement. With the volume action light, it's trying to make a market. You need to see a big fat green bar. You need to see a 36912. You need to see how he comes down and he hits that thing. You had a triple diamond play right there, and look at him trying to make the price. So what you're basically looking for, $610 put. If it's going up in value, it went up in value because that ticked down. And this ticked down here in value and price. So that's ticking down in price. This is getting a higher ask over here and a lower bid over here. Higher ask in the 610 put, lower bid in the $600 call at the wholesale action prices within this area right now at this very market price. Merry Christmas, MMTs. Google, 610 put, $600 call.